We got a very volatile market on our hands. Without further ado, let's jump right into the market outlook. So, market's been under pressure. It's no secret since about mid-November. Then we started seeing the harsh selling early January. And when things were looking most grim heading into last week, we closed at these lows, and we knew we had the Fed meeting coming, and charts were looking terrible. Everything was pointing to a market that is going to continue to flush. And what happens? The market rips higher, catches a lot of traders off guard. We did very well with it. There's a bunch of action in the Alpha Chat where traders made a great turnaround and really reacted well to the buying. We're seeing a lot of craziness in the market. I'm going to go through a couple things real quick. So we see the S&P here, huge rally off lows. I know you'll talk about the NASDAQ in a bit. NASDAQ ran 10% in 4 days. You don't really see that action too often. It's more typical of bear markets where we're seeing this hyper volatile action. But we take a look at the oil markets. They're looking like they're back on the rise. We got this Russia-Ukraine situation that's just putting those supply constraints even further on the oil market. So that's expected to just keep inflation on the rise, which is not good for equity markets in the short term. I was looking at bonds today. The 20-year bonds, TLT, they're in the absolute dumpster. Then we look at the TNX, the 10-year Treasury, which we know has had an inverse relationship with most NASDAQ stocks, is absolutely on the rise. So we're seeing a lot of kind of backwards trading in the market where relationships are not as obvious as they may once have been. We see the TNX, the 10-year rise like this. We saw the NASDAQ sell off viciously last year. We're not seeing that sort of thing going into this year. But we made a great turnaround last week. We'll talk about that in a bit. But Bennett, what are you seeing out there?
So the main thing, other than the things that you have gone over, of course now my chart just disappeared. We saw this, very obvious breakdown for the past few months, and I have like the NASDAQ pulled up. And of course, when it got the most obvious, where not even us, it was like anyone at least the people that I was speaking with, it was like the market had to break down, we had to go lower. And of course, when the trend becomes that obvious, the market decides to do something else and change course. So we have successfully kind of left that breakdown stage in the market, and we're shifting over into now what might be a new base being formed. So for like the NASDAQ, 13,000 is like the line in the sand. That's like the key level support. And in my opinion, I think the 200-day will start to act as resistance in this new base or this new range, and that's 15,000. So you have like this 2,000 point range, and we're like dead smack in the middle of this range. So it's very hard to like start to put on risk when you're dead smack in the middle of the range. When we get closer to 15,000, that's when we want to like take some profits. And then we conversely pull back in, or if and when that happens, we want to be thinking to buy up off of support, not just blindly kind of chasing it on the way down. Because if it comes down to 13,000 again, it's more likely to roll over and break down lower. But it just seems overall that we're kind of shifting out of that breakdown and into more of a basing stage for most of the broad markets.